Hi, Warriors. Hello, Vicky Stark Jr. Nice to meet you. Welcome to our community. Ziggy, how are you doing? Steve, Susie. Who else is here today? So what chart do I have up, guys? What can you see? Peter. Hi, Bob. Patrick Humes. No. Bob's got it. Okay. So it's a weekly, Bob, Dennis. And for a while, a long while, I felt this was a false breakdown in Euro Pound. And Steve started coming around when we started breaking out through this resistance area here, right around this 88.40 level. Now we're challenging this resistance right here. And to me, while I was looking at this chart formation for months, to me it looked incomplete, and it looks like the formation of destiny to take it up to a new high for a potential third drive formation up here looks to be underway, back under 88.40. It's aborting, but looks pretty positive. Something I learned from this is normally when Euro Pound is performing, it's usually because we're in a bout of dollar weakness and the euro is just outperforming on the upside. And, oh, okay, Zig. Yeah, smell the roses. But this time, we've done it during a period of dollar strength and started talking about it the last couple of weeks that EG may work not because of euro strength, but because of cable weakness, Brexit fears, the whole scenario. So just wanted to say I told you so, which Blake always tells me never to do. Anyway, it was a nice position. I don't think it's over. I don't know how to get on board right now as far as chasing it, but I do think we're getting confirmed highs up here. You could buy any pullback towards 89.60 or so. I don't think it's going to be that deep. Anyway, nice action there in Euro Pound. So just one more point on this Euro Pound. So for me, looking at this formation with just these two here sitting out here, I guess the best analogy I could give, it would be like a head and shoulders pattern with the right shoulder missing. Okay, everyone get that? So, you get to the neckline after the head, but, you haven't had the failing rally for a right shoulder. So 3 drives to me, I've seen so many complete that when I see it out here hanging out with the 2, it tells me to be patient or take advantage of a completion of the pattern. Dixie, of course, being led by not as much euro strength. I mean, it's down 12. Still think the euro is going to take out the 115 level. It's just hard to be short the relative strength when, you have euro down 11. Actually failed from where Blake called yesterday, said we could get up to 1620 before we found resistance where it could be rejected from. It got to 1628, clean it up, Blake. You're off 8 pips. We're calling the high here. And, but I still think it's going to fulfill, one more low. And one of the reasons why I've been looking for one more low is because of this low, which was a confirmed low. So markets rarely bottom. This is your daily on a confirmed low. So have lots of other positions on. I shorted it last night. I got out, scratched it +6. It may go now, but I'm taking heat and stock index ETFs right now, so I'm allowed to be an amateur too. Let's see. Oh, the gold. Okay, first a Dixie. Is it going to fail from here? I don't know. It's a nice looking day. I still think that we need completion over here. one more high in the dollar index to clean out the stops above here at 9565. I don't know how much higher above these levels will go, maybe 96-ish, 96.20. We'll see. But, you know, great call by Blake again that, you know, we hit resistance. I would say that dollar bears, if we're going to get something going to the downside, you're going to need to take out 95. Everyone with me on that? So that brings us, someone tweeted me, said they needed help with the gold and said maybe you should try the cursor method, which, you know, I've taught the cursor method for years. That's when, you know, if you're long something, you just put your cursor over the candle and drag it in the direction you want the market to go. I told him when I get desperate, I don't use just a cursor, I try magnets. So gold with what the dollar's going to do, I think there's one more flush. I'm going to be interested in new lows here. Joey, have you tried it? You're laughing because you've tried it, the magnet. Anyway, anyway, we all do silly things under duress, don't we? So I'm looking for one more low here, one more low in the silver. Silver is acting a little bit better. Maybe the scenario would be gold a new low and silver not make new lows. This kind of makes me feel confirmed lows that it will. But I think this is setting up for late this week, sometime next week, for something counter trend in precious metals. Yesterday, Anthony Grisanti talked about the COT setup. I've read about this for quite some time. It's all kind of coming together where maybe you get one more thrust up in the dollar, one more thrust down in metals, and be looking for places to, the setup is probably better in the gold than the silver on the COT. And it may be better in gold because of all the bearishness. There might be a better setup positioning wise, not just not sentiment wise, because they're both well positioned for something contrarian based upon no one likes, you know, everyone loves the dollar, everyone hates anything that's not the dollar, hates the gold. So start putting this on your watch. You know, a couple of things I'd look for in the gold to tell you maybe the dollar rally continues and gold's holding up on a relative basis. We make a new low. I'd actually like to see the big round number taken out at 1200. Just a little psychological big round number being taken out, and make sure that the daily is above 30. That's a 4 hour. I think the 4 hour will not confirm. The daily has been diverging, but you could see how oversold it is. So you want at least the 1 hour and the 4 hour in agreement. And, you know, I could be all wet and maybe we're not going to make a new low. Anyway, that's what I'm waiting for. Yields, Steve had a great discussion with Steve yesterday about, you know, the yields, and he said he needed more evidence like usual. And I think if there's a chance to be right for lower yields and we're not going to spike again, they have to stop here and start heading down again, because yesterday was a pretty decent day and we have another day here. But back under these lows, yields are going lower. Back over these highs, I would say we have a shot to head up towards the highs. I lean more towards this because, call me a broken record, you know, everyone's thinking the S&P is a layup from here. They're probably right, a layup for new highs. The S&P far surpassed this rally high from last week. I showed it last week and said I think S&Ps can make a new high because of this. I don't know if I did it here or in my mentoring group. So we had a confirmed high here. We're not confirming here on the 4 hour, okay? So this confirmed high was not confirmed by this recent leg up. Dow, similar look. And the NASDAQ actually retraced 88.6 within a point. So we'll see. You know, I have bearish ETFs on. I'd like to see it. Yesterday it held the 78.6. So something else you could do with retracements is when they surpass them and they're heading to the next fib, and you might be the wrong way. If you're going to start looking for confirmation, it would be take a look at the fibs on the way back down. So initially back under this 74.43 would be one of the first tells that this rally has terminated, and definitely back under this 61.8. This is where I started putting stuff on. Okay, so not futures, ETFs. I'm down. I'm still holding. We'll see. We'll see how things close by the end of the week. A little bit of a down day, but not a lot of people saying be short stock indexes anymore, because, you know, look how close we are to the January high, February high. High's 28.76, so everyone's thinking it's a layup, and probably no one's saying, you know, what if we fail to not get to new highs? We'll see. Time will tell. Oh, Jack, silver likewise. Ziggy uses the cursor method. Okay, well, I'm going to let Steve cover the board. You know, I tweeted this and I believe it. I'm not patronizing Steve, but I believe he gives one of the best daily reviews, technical reviews of the whole board in the business. So, I mean, you're going to have some interesting areas to, every day he supplies interesting areas and commentary on a multitude of instruments. So I just wanted to acknowledge Steve. And I also tweeted, you know, after face closes, Steve and Stell and Blake especially, they spend a lot of time in the members chat. So, and that's when they're really, you know, when something's happening, and let's face it, a lot of things happen after face closes, right? Because that's a stock market opening. So become a member so you can hang out with those guys after our webinars and stay in tune the whole day. Okay, because there are some great traders in there. Amanda moderates it, but there are pros in there. Pros come here to trade. People learning to trade do too, but also pros come here to hang out and do their intelligence gathering and share ideas in the members chat. So become part of it. Sign up today. So Blake, I'm still waiting for the temperature to come down 5 degrees. California's on fire. There's even one not too far from me in Riverside in Orange County, and California's on fire, buddy.
Really?
Yeah, you came here, and after you left, all the fires started.
That would, yeah. It wasn't my fault. I'm not taking blame for that.
All right. Well, I'm just saying, great timing. You missed all the fires. You have enough fires trading FX, right?
Yeah, right. Exactly. I'm trying to put out fires over here. Speaking of fires in FX, you know, if you look at the cable, and there is some fire going on here with the pound. Pound's you know, approaching this this 618 retracement. This is the post-Brexit move, and you know, one of the things I could mention this actually on the week ahead video, and I'm going to mention it again here, is because of the shallow retracement of this coming out of this descending wedge, only hitting 24% retracement. You can see it right here. Only hitting a 24% retracement. I did expect us to hit a new low, and we did. We hit a new trend low, and here we are. Now, I also mentioned in the week ahead video, I expect us to come to 128.50. We're here. So the question is, do we bounce from here? I think we do. I actually took a counter trend trade this morning. If you're a
I see you had a pit
subscriber.
What did
Yeah,
you
I
do
put
it
in
half an hour ago?
Yeah, something like that. And I went long. And you know, this is, I don't want to be obviously too aggressive until we get back above 129.50, 129.70. But the RSI is very divergent here. We're very oversold on like a 4-hour, and we're at the big fib level. And so when we hit these big fib levels, I tend to be very cognizant of them, and be I start to trade against them if we're at a 618, because that's if there's reasons to be. And right now there's a few reasons, Mountain, why I want to, and one of the main reasons is DSI on the dollar is extremely extreme, and it's extreme for the cable on the downside. So I think the pound registered like a 12 on DSI, and the dollar index was at 92 or something like that, or 88, or I forget what it is. I can't remember right off the top of my head. But
I also read that they're thinking, Carney's suggested that they change the name from the British pound to the British peso.
Yeah, right. And maybe it seems that way. It sure is. But I tweeted this morning, we've lost 10 since here, 10.5% of value in the cable in literally 4 months. I mean, that's a pretty hell of a strong drop. And I tried playing the pound counter trend over here out of the descending wedge and made a little bit of money, but I really was expecting a much bigger move. I was expecting us to get way up here to like 136 or something, and that obviously never transpired. But and the bounce was very short-lived. And after that, such a shallow bounce, I was like, I don't know if I want to play this on the long side. At least not. I hadn't played it on the long side. I can't even tell you the last time I played the cable to the long side. I guess it was probably somewhere around there. And I just really haven't been trading the cable all that much. I might have traded it a couple times throughout, this 130 to 131 level, but I don't, nothing like substantial other than scalping around. Okay. So, anyway, just kind of what my observations are here. And like I said, I'm trading the cable, and I don't want to get too aggressive unless we get back above. We start showing some sort of reversal, not on an intraday basis, but by a daily basis. So, if for some reason, you're sitting here by the end of the day, and we see that this candle is red right now. But and I always like to do this with you guys. If shoot, hold on, I gotta let me do that. Let me remove this. This happens every once in a while. Okay. If for some reason by the end of this session, let me grab my pen here. If by the end of the session this candle turns green, and we have a body, and it looks like this, we have a hammer, then I'd be pretty convinced that we're going to completely reverse. But that means we have a lot of distance to travel today. But there's a lot of time left in today too. I mean, if you think that what you see here is what we're getting by the end of the day, you be gravely mistaken. Things can really change. By the end of the session. So that's why, I may be taking a little counter trend trade here, but it depends where we close by the end of the session. Because you can see, the highs of today is at 129.60, and we are 100 pips lower right now. But if for some reason we reverse by the end of the session, which is possible. Look at equities. Equities are under some pressure at the moment. Here's the S&P, coming down a little bit. NASDAQ is showing some signs of weakness here after hitting this 88% retracement. A move down in equities could create some volatility in FX. I don't know what kind of volatility, because we haven't seen risk aversion and so long, it's hard to justify exactly what we're going to see. You know, if we see the markets come off, is that bearish the dollar or is it bullish the dollar? Does the dollar catch a bid on a risk aversion type of move, or does the dollar just get hit across the board as stocks get hit across the board? We don't know. Those are the type of situations that we're not aware of because we don't know what the market's like in a risk-off type of scenario. But those are the things that I think about. It's like, okay, well, how's the dollar going to respond? Aussie's very much range bound. If you guys are trading the Aussie or the Kiwi right now, good luck, because it is a very challenging environment trading these two particular pairs because they just aren't moving anywhere. Here's the Kiwi, here's the Aussie. They're just kind of stuck. The Canadian has had an aggressive bounce, and I'm a little bummed out about the dollar CAD. I missed this move yesterday as we rallied off of these lows, and you know, and if you listen to the week ahead video, you knew that I was looking for this. I mean, I was specifically waiting for the U.S. dollar Canadian to start to rally, following a move down to 129.55, and I had to step out for a little bit of time yesterday, and when I stepped out, I missed this move here from 129.80 to 130, 30, and then I just never scaled in after that. But really big move up into some resistance here, and the dollar Canadian looks very well bid. Remember, if you're talking about NAFTA and you're talking about the NAFTA negotiations, the country that's left out in the cold right now is Canada. Even though Canada's Freeland over the weekend said that Canada is willing to come back to the table, and that's what she had implied over the weekend. That doesn't necessarily mean that she's going to be included. It's like, you had like you're with your friends and you had one friend being a jerk, and the other two are like, we're gonna continue to hang out, and the other one's like, okay, I'm sorry, I was being a jerk. The other two might say, well, you were being a jerk, so we're not even going to deal with you for right now. So Canada may be showing some willingness to come back to the bargaining table, but whether or not Canada is allowed back in is to be seen. But I'll tell you what, the Canadian is acting fairly weak, and a lot of this might have to do with crude. Crude is pulled away from this this wedge. We have been talking about the wedge resistance. Here, let's go over to crude oil. If you have been looking at crude, that's a 4-hour. Let's go to the daily. For the last several days, crude tested and rejected the top of the bearish wedge today, which could put crude back at the 67 level. Yesterday, this is basic technical analysis. Daily analysis remains the same as we are at wedge resistance. This morning, crude has slipped from wedge resistance above the 69 level and looks like we're heading back to the 67 level. So I mean, this resistance is really played into crude oil, and you can see this is the wedge here. Same chart I was just showing you right here. And this weakness in crude might be feeding into the dollar Canadian strength or Canadian weakness. The U.S. dollar Mexican peso is trying to lift off the lows here. We've been just back testing this whole trend line here. It's been very slow going, but it's trying to firm up. As Dale pointed out, precious metals are weak, and I don't know what the deal is with precious metals. I don't know how they're going to respond here. Just take a real quick look at NASDAQ. NASDAQ actually just pushed. We're breaking down just a little bit here. Now I say breaking down. That's actually a pretty strong way to describe the NASDAQ. The NASDAQ is actually not breaking down. The NASDAQ, but intraday, we're trading at lows intraday. And breaking down, like I said, that's probably not the right way to describe the NASDAQ at the moment. NASDAQ probably looks like it's going to come down to some support here, somewhere down in this neighborhood. So NASDAQ looks like we can maybe drop another 10 or 15 points before we find some support. But you can see the NASDAQ's peeling off a little bit of its recent gains, but not much. I mean, it's pulling back just a hair. But you know, every move starts somewhere. So if you know, the thing I think we need to be alerted regarding the NASDAQ is that we might be making a lower high. And that's important because, you know, the S&P has basically, you know, also longer term made a lower high. So you can see the NASDAQ, and both the NASDAQ and the S&P might be struggling here at these highs. And the Dow at the same time is really, you know, really struggling. Actually, it is not even close to its all-time highs from back in December of this last year. So let's see, going over to other currencies, the US dollar, Norwegian krona, just kind of struggling up here. The US dollar, Japanese yen, I had a short dollar yen from yesterday. I shorted it like at the 111. My average was like 111.10, 111.15. It bounced back to 111.40 and change, and then I closed it overnight. I got limited out at 111. I just put in a bid, and I got hit while in European trade. The yen, I'm not sure how to trade it right at this moment in time because it's not moving so closely with risk appetite or risk aversion. So it's kind of a trickier trade at this moment. And that's why if I had some clarity on the yen moving with equities, it would give some clarity with the other currencies in the FX market. And right now I just don't have that clarity. I don't know how the yen's going to respond to the equity markets. Therefore, what concerns me the most is if in the event that stocks really start to aggressively be sold, what do you do in FX? And I don't know what that answer is, and that's the big unknown for me. And again, I can't stress that we're, you know, in summer months. I mean, this summer has been, stocks have been much stronger than I had expected, but that doesn't mean that they're going to end the summer that way. We still have another month, and within the month, you know, the stock market could correct 5%, and if it corrects 5%, how does the FX market respond to that? And I just don't have those answers. But maybe, you know, my colleagues Steve and Stelios might. So Steve, if you're listening in, what are your thoughts here? Are you here this morning? Take that as a no.
Hey, mate.
Oh, hey, Steve. How you doing?
I'm good. How have you been?
Good. I'm just sitting here trying to figure out, okay, you know, stocks are, you know, showing a little bit of weakness this morning. You see the NASDAQ's at lows on the session. That doesn't mean much, but I guess the question that I'm asking is, you know, if stocks do come under pressure, what do we do in the currency market? What is the trade? Because I don't know what the trade is. Have you thought about that? You know, do you buy dollars as more of a safe haven currency, or do you buy yen? What do you do if stocks, like, let's say we had a 5% correction in equities? What do you do in currencies?
Personally, Blake, I think that it depends on what kind of risk off we would have. It's just a correction in stocks. It's different than some kind of some kind of a big headline that would come.
Event-driven, of course. If it's event-driven, it's one thing. But let's just say that's not. Let's just say for, you know, it's just a normal, you know, 5% correction. You know, we've had, you know, equities. Just you know, let's just go to the S&P really quick, and you know, you can go, okay, well, you know, 5% correction from current levels, you know, would take us back down to 5% actually is pretty good, but you know,
first of all, having to do with the yen, it has been recently trading inversely to what we usually have been accustomed to. I mean, I was coincidentally talking about the yen yesterday, and I was saying that more frequently during the past few months, USD yen is trading oppositely to risk appetite than along with it, which, you know, that was one of the best established relationships in the market, right? And it seems to have been completely broken down, if not somewhat reversed. So I would really not touch the yen based on risk appetite because we've seen it do crazy stuff lately. I mean, I really don't. I mean, what I was saying yesterday is that if I wanted to trade the USD yen, it would definitely be on its own. You know what I mean? Not trying to take into account any other correlations because there are none that are actually functioning at the moment. Now, having to do with the dollar, we've seen, which is somewhat counterintuitive, we've seen the dollar rallying. It's been, several months now that it's been rallying. Of course, now it has spent a period of time consolidating in a triangle, but still it's holding up near the recent highs. In essence, it's now been almost half a year that it's been rallying, if I'm not mistaken. I mean, in a few days, it's going to be half a year in the middle of August.
Right.
And during that period, we've had the stock market recover. Right, so we found a low in the stock market after this very abrupt, violent move to the downside after that parabolic ascent to the end of January. We then found a low roughly when the dollar bottomed. So far we are seeing it's not a very high correlation, but we've definitely seen the dollar recover as well as the indices recover at the same time. So I think that unless there is some kind of a big surprise that at the same time should affect, the U.S. economy, I think that we might actually see the stock market even pull back from here along with the dollar, because lately the correlation has been mostly positive than anything else.
Yeah, it's hard to say. I mean, that's the $1 million question at this point. It's like, what do you do? I don't know. But I'll tell you what, gold and silver, they have been very, very weak. They have really, extremely weak. And but we haven't seen any risk off either. So I was listening to one of the economists just bashing gold, saying that gold's losing its place as a safe haven vehicle. But it's like, okay, I hear what you say. Wait, UK cabinet said to plan no deal Brexit meeting in September. By the way, that just came out. Well, they're planning that would be a just in case.
Yeah. A contingency plan.
Contingency. Well, that makes sense. I mean,
Yeah, of course.
Yeah, why wouldn't they?
That's a prudent thing to do anyhow.
Right. Let's meet just in case. I mean, of course.
Although I bet the market doesn't like that. Yeah.
No, the pound slipped on that news. It slipped just 10 pips, but it's the pound
actually had very interesting confluence of supports at the moment. So will be very interesting to see what happens actually from here, because this is the moment of truth. I don't know if it collapses from here, it's going to look very, very bad, right?
Yeah.
If you think about it, it's the exact same situation with gold. I mean, there is one possible bullish interpretation with gold I was showing here the other day, and it's this potential descending wedge, because we've also been testing support, which is like the confluence of the 127% extension of the last move high for gold, and also the 50% feed from the lows. So, if it manages to actually find some strength and break above, fine. But on the other hand, if it collapses from here, I mean, the next area of support is at 1190, but, I don't know, gold feels to me very, very manipulated. Why? Because suddenly and coincidentally, it has completely broken off its very well multi-year established relationship having to do with real rates. So I don't ever remember another time that gold was going down while real rates were also going down, because in essence, real rates are the opportunity cost of holding gold, right? So, that was a very, very well-established correlation, and it has recently broken down. As you very well said, even when we were seeing headlines and news that could potentially alert to danger in the general system, gold didn't seem to care, and it was also moving lower. So gold seems to be selling off, irrespective and regardless of whatever else is happening. So lately, it seems to have only one direction, no matter what's happening. And this looks very artificial to me. I don't know what you're feeling about it.
Well, I don't know if it's artificial or manipulated. I wouldn't necessarily go and say that. But what I will say is, and what I was saying is that this economist was like, well, gold is, not going to isn't going to act well, and in a risk-off environment. It's like, well, when have you seen one, and how do you know that? I mean, how can you justify saying that when the markets are near all-time highs and they continue to grind higher? So I don't know. It's just anyway. But I think gold still has the potential to go to 1175 is what I was looking at, which is let me pull up the chart.
1168 is the 61.8. Oh, actually, yeah, I know what you're looking for. Yeah, I know what you're looking for. 1172 here.
Yeah, it's a big 618 and also 78% retracement, like confluence that comes in around there, and I think that's a quite possible support.
It is. So far, it definitely doesn't look good. I mean, I was saying since several weeks ago that from a technical perspective, I really don't have something to advertise buying gold. I mean, even if I wanted to make a case for buying gold, I do see on occasion like some patterns that could end up being reversal patterns, but they all fail, right? And they keep failing and they keep producing more downside. So it is what it is. I mean, you have to respect the market, like it or not. It is what it is.
Right. Now, I'm going to shut up here. I'm going to let you take over, and I know Grega wanted to say a few things. So we have.
Oh, do we have Grega with us?
Yeah, Grega's wants to come in. So Dale, sure. Steve, good luck today. Everybody else, good luck. Don't forget to visit our sponsor, Forest Park FX. For those of you that want to get Forex Analytics and have your trading assist in compensating for the cost of your Forex Analytics subscription, make sure you visit this page that Steve is showing you and contact them directly, as they will be able to help you and find a broker that'll fit your needs. So I highly encourage that you visit them. Plus, they are our sponsor. They are the reason that this webinar happens for you guys. So make sure you talk to them. It's free to chat with them. So there's their contact information, and that's Forest Park FX. And just tell them that you came from here. So, all right. Thanks, Steve. Thanks, everyone.
Great interview today, Blake. The guy is number 6 in Timer's Digest.
Wow. Yeah. That's pretty cool. Hey, if you have a Twitter handle with it's just your first name, that's pretty cool. Dude, that's called an early adopter right there. All right, guys.
Take it easy.
Enjoy the interview. Thanks.
All right. Thank you. Hi, Steve.
Hey, Dale. How are you?
Did you take it? Good, man. Did you get your last 15 pips in Canada?
No, I didn't, actually. I didn't, and I said it on the chat room that if you remember, I said it yesterday here as well, that if for some reason the Canadian, the USD CAD reversed and closed above that 130.40, I would close at the end of the day, and that's exactly what I did. Instead of getting 250 pips of profit on my last part of my position, I got 150. But, sometimes if you remember, what was it, a month and a half, that I got lucky that my limit order was hit just for 2 pips, and then it reversed. This time, I came 15 pips close, and I gave back some of my profits. But it is what it is. I had a plan. Sometimes it works, barely works. Sometimes it barely doesn't work. But I still got profit from the last part of my position. So that's it. It's trade
That's
over.
trade. Just tried to coach you, buddy. That's all.
And thank you for your kind words, by the way. Speaking of the DXY, there are a couple of things I wanted to show very briefly because Greg is joining us, so I wouldn't want to take. I know he can't be with us. I'm here every day, almost every day. Greg can't, so I want him to be able to show us as much as possible. Just wanted to show the DXY. Seems like the DXY wants to move higher from here. If we interpret this especially as a triangle. So I do think that the dollar seems to have more upside from here. As we said, cable on a confluence of supports. We are to find out today. If you remember, I said yesterday that let's see if this broken trend line acts as resistance. So far, it is acting as resistance. So perhaps the triangle interpretation. I mean, the symmetrical triangle interpretation instead of a flat bottom triangle interpretation might be the right one, and we might be moving lower from here towards 113. Aussie Kiwi is still consolidating in ranges. USD CAD perfect rebound from a perfect ABC, and I do think that we should be looking higher in USD CAD from this point on. I very briefly also wanted to show, because I was talking about it and I was expecting from that breakout. USD ruble decisively breaking out of this triangle. I think that it's now on its way to a quality target, which is a lot higher. Perhaps we're going to see prices that are, closer to 71. I think that any pullback towards the 64.25 area is a good buying opportunity. So I do think this is a nice trading opportunity. What else? I think that those are the key things I was looking for. Grega.
Hey.
Let me pass you the screen because I'm very, very interested to see what you're looking at.
Okay, just a second.
It's over.
Okay. So we can see charts, right?
Yeah, absolutely, mate. Absolutely.
Okay. So how are you? And Dale?
I'm good. I'm good. Yeah, I know that you had some extended vacation, so I bet you're fresh.
Yeah, as you know, after vacation you need another vacation, so never enough.
A vacation from your vacation.
Yeah. For another vacation in September, I guess.
September is probably the best month for vacation as well, because less people are out there, prices are even better, and the weather is still very good.
Yes, exactly. Especially in Greece, right?
Oh, absolutely.
Okay, so on euro dollar, as you know, we have been discussed about this sideways price action that has been in play for the last 2 months or so, and so far we can see a nice push to the downside, and this reversal, lower current reversal, actually occurred from the upper side of this contracting range. So I have been looking for this triangle to be completed at this area, and as you pointed yourself, we have seen a nice break to the downside, and now this trend line has been retested. So I think that we maybe see another retest for this ABC range into wave 2, or we just continue straight to the downside. What I see is very strong dollar. Metals are also weakening quite nicely today. Yeah, so
metals are being obliterated for many weeks now.
So I would not be surprised if maybe this wave 2 is already finished here. Also, I can see crude oil moving aggressively to the downside as well. So a lot of price action in intraday activity is looking very, very impulsive. So I'm not really sure if euro dollar can really see much deeper pullback here. But anyhow, any higher prices would probably be in such case limited around 50 or 61.8% retracement level of the previous decline. So I'm expecting more weakness here on euro dollar. Cable, as you know, is one of the weakest. Pound in particular, we have seen a breakout of this triangle in a wave 4. So watch out for this prices to continue down towards this swing support from a year back. Actually, it was August 21st swing low, which is what 100 pips away. So I think that we may see some pullbacks from there, but I'm not really sure if we may see this deep pullback into wave 2, since, as I said, this current decline is very, very aggressive. So it can easily extend much, much lower, especially if we consider this pound is also very weak against Japanese yen, where I also see room for much further decline. So generally speaking, I think that pound could really suffer a lot more. And also, we talked about pound yen in webinar.
Pound yen, I showed a few days ago, Greg, I think it was on Monday. I think that pound yen and euro yen technically played out perfectly. I mean, that rebound in the pound yen was perfect. That rebound in the euro yen, which was in a pennant, was also perfect. I think both of them look fantastically for more downside. I said it on Monday.
Yes, it was really perfect, as you said, perfect ABC recovery. We have seen a reversal down from this upper trendline resistance, and most important was this decline that occurred from that line. It was clearly aggressive and clearly impulsive. So
yeah, and clearly wave 3 now, because it's also breaking below that channel.
Yes, exactly. So it was just a matter of time when we will see again a retest of these May levels. And if today we are seeing quite strong candle to the downside, if today we will see a daily close below these May levels, okay, which means if we will not see a spike only, then I think that we really could see much more damage till the end of the week. But of course, be aware of this wave 4. So as long as the market is for now trading, how to mark this validation level of below this level, which is 45.20 or so, that's how long this pound yen should remain in downtrend. Actually, this target for wave 3 is at 161.8%, which is around 141. Okay, so actually that would be my next projection. You could see a daily close and set below this swing low from May. So I will stick to this bearish view for pound yen, and also if I take a look at euro yen, here was also only a free wave corrective recovery.
Exactly, that's what I was looking. That pennant that you just showed the support actually of the pennant. I was looking at it like a pennant. If you connect now A and C there, you leave the bottom trend line exactly as you drew it, and exactly. I was looking at this like a pennant. Yeah.
So now imagine where yen crosses in particular could move if euro yen has still room to drop, what, 400.
And not only that, we've been seeing these moves accelerate, although USD yen has not really started playing ball yet. Imagine if USD yen starts playing ball, right?
Yes, we have seen some some weakness at the start.
Yeah, but not that much. I mean, imagine if USD yen collapses.
Yes, I think that this dollar yen could start to roll over if we will finally see some aggressive decline on stocks, which are still not happening. So I think that market.
Speaking of stocks, because I know that a lot of people are perplexed with what to do with this recent stock strength. I mean, definitely we're not seeing yet the impulsive characteristics that actually peaked at the end of January with that insane wave of euphoria. But regardless, I mean, indices keep grinding higher. Some of them have already reclaimed all-time highs. Some of them are getting very close to that. So, what do you think?
Well, they are so tricky because I can see that German DAX is not following that pattern at all, what the S&P 500 is doing. So I still think that US stocks will come under pressure and that risk is very big here to be long. So as we approach all-time highs, there will be even more traders interested to look maybe for even more impulsive reaction to the upside. But if we consider that we are now still actually in uptrend for a while, well, after all, we have missed this trend. So it's definitely too late to look for it now. And I think that it's even more, we have to be even more cautious about the reversal that will occur. Technically speaking, on the intraday trend, I see a 5-wave recovery unfolding, waiting on a final push up towards 2870 maybe, and then a reversal to the downside. I still think that this, regarding old school techniques, if I just remove this, it's still some kind of a wedge pattern here, right? So if you connect these swings. So I still think there is the price action that, if really turns to the downside, could be very, very ugly for stocks, because I see still a resistance up there. So I would definitely not be turning bullish on stocks here.
Okay, makes sense, Gregor. Makes sense.
So I can show you maybe DAX. DAX short-term picture is a little bit more clear to me. What we have seen is a break below this upward channel that reacted as a resistance. First pass was here. I think it was yesterday, or on Monday. And yesterday we've seen another retest of this trend line. And now it looks like that we are turning to the downside. Also, if you can see clearly, only 3 legs to the upside, right? So I think that there is a risk for another leg to the downside. I think that wave E actually could be coming in play. I know that this wave E can be final leg of this very big triangle that I'm tracking, but still there is room for 400 points drop. Okay, so I think that European stocks could see much more weakness as well. And that's for sure could lift Japanese yen even more. Any questions about any markets, Steve?
Let me see. First of all, they want your specific view on the USD yen.
Okay, I will take a look. Firstly, let me also cover ASI, okay? Because I also have PIP on this one. So ASI is not moving much, but I have been warning about this triangle consolidation, which is a continuation pattern. So we expect sooner or later market to resume to the downside. This would be a 5th wave, so be aware of a drop below 7.3 level. And what is really interesting is, the most important is probably today's price action. Okay, we have seen a nice recovery from Monday. Okay, but I had potential impulse wave count back in my mind. Okay, because you never know what market will actually do. So I was still a little bit careful here when market was trading at these levels, because it could easily be waves 1, 2, 3, 4, 5 to the upside. But what we can see today is a very strong reaction to the downside back into this area. So it's clear enough for me that this was not an impulsive rise, but rather a corrective rise. So if I go back to the higher time frame, what we see that this was probably wave E, and that we are going to see much lower prices ahead. Okay.
And to be honest, both Aussie and Kiwi are well overdue to finally move out of these consolidations.
Yes.
And I kept insisting that, as long as they don't break above the key resistance levels, which it was the 75-cent area for the Aussie and 68.70 for the Kiwi, as long as they didn't penetrate through these key resistance areas, I kept stressing out to our listeners here that a continuation to the downside is by far the most likely scenario to play out.
Yes, but once we reach here a new low, we know the triangle occurred prior to the final move within the larger trend, and trend is down. So final leg will be happening here down there, which means a reversal may occur. So those triangles are very tricky for traders who don't know.
Let's assume, Gregor, that Aussie and Kiwi break to the downside as expected. What are your targets for that final thrust lower? What would be your target? What would your target be for the Aussie, and what would your target be for the Kiwi? Because personally, I have a target for the Aussie at 71.60, and I have a target for the Kiwi because it has a nice confluence of supports at 65 cents exactly.
First, or not first, I should say more extended target for a fifth wave would definitely be this low from 2016 December levels, 71.50.
Yeah, 71.60 I'm looking for. Yeah, okay.
Yes. But when I recognize the triangle, I use triangle measurement technique. So that's a technique where I use
the maximum. Yeah, the maximum distance.
Yes, the maximum length of this within this structure, which was clearly wave A. So then I project this distance from the end of the triangle. Okay, so here is the first projected target, which is at 7.65, and the next projection would actually be from a breakout point. Okay, but the breakout point, in such case, is still ahead. It would be happening at 73.20 around there. So in such case, our projection would be at 71.
This confluences with your other projection roughly at 71.60. That's why I also look for 71.60.
Yeah. So, but I would be careful because metals, if maybe gold is forming there and ending diagonal, I would be.
That's how it looks like. It looks like a descending wedge, actually.
So this could have a strong impact on Aussie as well. So if gold will turn up from a new low, then something similar may occur on Aussie as well. So I see both markets actually within upcoming legs to complete the larger structures. If I take a look here, to give you an idea, here's for our gold, what I'm tracking is actually a move towards this psychological level down there, and maybe watch out for a potential reversal. So it maybe Aussie will make only a spike to the downside. I don't know. But
regardless, we're talking about corrective.
Like that gold count, Greg. Nice. One more flush. Yeah. Would that be an diagonal, buddy, down there?
And I believe that Fabius is also like it.
Oh yeah, absolutely.
Is it an ending diagonal at 5 down there?
Yes.
Okay. Thank you, Greg.
Regardless, Grega, this is a 5-wave count to the downside, so I'm guessing that then you're looking for a corrective recovery. Am I right?
It's actually a 5. Let me extend this. It's a 5-wave decline in wave C.
Okay.
Wave C is part
nice
of
rally coming.
And this triangle is actually
quite a strong rally coming. Yeah.
Yes. After all, we must consider that euro-dollar is also breaking out of a triangle. So it means it's very interesting because market has been sideways for a long time. Traders were away, and now they will see a break to the downside. Everyone will say, okay, euro-dollar is bearish, but at the end of the day, market will move into the opposite direction.
Speaking of which, Grega, also the DXY is currently breaking out of a triangle. So everything, everything more or less is showing consolidations that could produce one final thrust before seeing some reversals, right?
Yes.
Hey guys, I played triangle in the high school band.
You mean in the
how musically inclined I was?
You mean in the Christmas band, right? You were
yeah. I could take the stick and you'd run it around the triangle. Yeah. Oh man, I did a triangle solo, like Jimmy Page. Just kidding. Anyway, we got to laugh too, don't we?
So generally speaking, I think that breakouts that we are seeing right now, to the downside on gold, to the downside on euro, to the downside on Aussie with a delay probably, what we are going to see is a final piece of a larger decline that is underway already since what, start of the year or so, or not start.
What about? I have have two questions about you before Dale starts his interview. What do you see specifically in the short term happening in the USD yen? And what do you think about the FTSE? Because we had those two questions as well.
Take your time. My guest isn't here yet.
Okay, good. So USD yen, you still have the triangle interpretation here, huh?
Still looking for a triangle interpretation, and what we have seen recently is that market actually broke below this corrective channel support. It acted as a resistance nicely here, so I think that there can be more weakness ahead coming in play here for this wave E. My minimal downward objection would be here around 108 level, where I would watch out for potential reversal to the upside. On the shorter term here, maybe if we consider a three-wave decline for a wave E, then each leg, wave A and wave C, should be made by 5 waves. Okay, so that's why I'm looking for potential leg down to be wave 1, the first leg here. This was a wave 2 pullback, and maybe we got a very strong drop here for a wave 3 of A. So now imagine what would this price activity do to other yen crosses, which are already weak, especially if euro cable will remain weak against the buck.
Okay, what about FTSE? In FTSE, I do see quite a more bullish interpretation. I mean, we had an impulsive move higher, and then we had like a corrective move lower, which seems like a bull flag, and we seem to have broken out of it, retested it. So, you know, I wouldn't be surprised if we saw some acceleration to the upside. Obviously, the cable weakening is definitely providing some tailwind. What do you think about it?
Yes, just let me find the FTSE first.
Absolutely. UK 100 you can use in TradingView if you want.
I think I have it somewhere here. Just a second.
And Tim is here now, guys. So.
Okay. Well, look,
now you see what I'm talking about.
Yes, I mean, I don't need any more information than to be, even if you are not Elliott wave.
You can see this as a bull flag.
Yes, should recognize this structure as a very clear directional pattern, just more upside. You had a strong move,
a bull flag, and then ABC.
So, and now what would you expect? Again, a strong move.
Yep,
so,
I'm with you there.
But here, this price action from that low, okay, it's not that
impulsive yet.
It's not aggressive. So I would try to be aware of this potential triangle formation. Okay. Maybe we see
as an alternative interpretation. Yeah.
Yes, but generally speaking, I think that we will see these highs back from May. So, and obviously with cable weakening very strongly, as you said.
Yeah, it provides a tailwind for sure.
Yes.
Thank you very much, Grega. Always nice to have your input.
Thank you, Grega. Thank you, buddy. Wizard of Waves, Grega Horvat. Everyone thank Grega. I like Grega's looks. They really crystallize things for me. Steve's looks give me confirmation. A lot of great talent here at ForexAnalytix and an excellent interview. Tim, I see you here in the room. Looking forward to speaking with you and meeting you. I'm now making you the presenter, and you'll have controls so that we could hear your voice and see your screen. Welcome to FACE, Tim.
Show my screen. Let me try that button. Okay, very good. Can you hear me okay?
I can hear you loud and clear.
Oh, excellent. Well, thanks so much for inviting me, Dale. This is quite an honor and a pleasure here. So I'm trying to get used to all of the controls that we're seeing here. You should see my desktop here, which is not very informative.
Yeah, all your private things.
all my private the stuff we want to conceal here, right?
Yeah.
So let's see if we
Tim,
can get
really a
else
pleasure. We have your a bunch of charts up now, and I read the link that you sent me about your ranking in Timers Digest. Congratulations on that.
Well, thank you.
And not just a flash in the pan, but for many years, your consistency of being ranked in that, that's a pretty prestigious ranking. Who put that out, Timers Digest? That wasn't Mark Hulbert, was it?
No,
Matt Davis?
Jim Shugart, I think is his last name. But he's been doing it for about 30, 40 years, and it's been,
right.
He publishes every 3 weeks, and this is issue number 659, I think. So
okay, yeah,
he's been around a while, and what he does is track.
So have we, right? Been around for a while. You and I?
Yeah, we've been around a while also, right? I'm about to become a septuagenarian here in about another week. So.
All right, well, why don't we do this? Let's take our right foot out of the La Brea tar pits and talk a little bit about your journey, Tim, because, the journey's interesting of how people get from point A to point B. So I'm interested in, at the beginning, was it the planets that led you to looking at the markets, or was it the markets that led you to looking at the planets?
Well, a little bit of both, but actually I got involved in looking at the planets first, and it was quite an interesting adventure along the way. I got intrigued with planetary alignments and the study of astrological factors from a very early age. And then when I was an undergraduate in college, I decided I was going to begin to do a kind of a focused study of the subject, and began to learn some of the techniques involved. I was curious about the markets at the time, but I never quite made that connection between the two.
Okay.
So that was another area of interest for me. And I, did a little bit of graduate study and went to work as a newspaper editor, and had an advertising and marketing agency, and was a college professor for a while. And all along the way, these planetary studies kept intriguing me. So I at one point decided I was going to hang out a shingle and promote myself as an astrological analyst. It was a funny story, because at the time I was living in a rural area in western North Carolina. Had a young family. I was kind of trying to make ends meet, pay the mortgage, and my daughter was a first grader, 6 years old, going to the local public school, and the teacher asked the class, "What do you want to be when you grow up, kids?" And my daughter said, "I want to be an astrologer." And I'm not sure the teacher knew what that was, but she said, "Well, tell us, why do you want to do it?" She said, "Well, my daddy's an astrologer, and he helps people out a whole lot, and he makes $1,000 a year." Unfortunately, she was accurate on both counts.
What a great story.
That was kind of where the light bulb went off for me. I thought, okay, wait a minute, there is a connection to the markets here. I better figure out how this stuff works. So I spent a lot of years.
She brought your 1099 into show and tell, and
exactly. Right.
it's interesting, Tim. You kind of come from a writing background, so that was my major in college too. So even in the markets, you can apply writing skills and speaking skills. And I was wondering if you want to talk about the time period in your life where most people would have felt really, really challenged, where you have a neurological disorder.
Right. We all had a time. Quite an event there. This was back in the Memorial Day weekend of 2001, actually, some years back. And I had been working with the markets and the planets and had been publishing a newsletter for some time, and getting pretty good at it, I thought, but if things were not quite gelling the way that I wanted in terms of market analysis at that point. But I thought I had gotten the flu, and it was a lot of coughing and stuff and went on. And so, like any normal human being, I tried to keep working for a few days. Eventually, I went to bed and then woke up one morning and my feet were numb. And then it became a gradual paralysis that spread over my whole body. The doctors couldn't figure out what was going on. After a period of about 10 days, I was totally paralyzed. I was actually hallucinating because my eyelids were frozen open and I was sleeping with my eyes open. And it was threatening to shut down my respiratory tract when I finally got to the right hospital and got diagnosed. But I was paralyzed from head to toe for a couple of months and then had to, getting out of intensive care into the hospital, into a rehab facility. It was very much like having had a stroke and having to learn to use my entire body all over again. So it was quite a challenging process. But there was a lot of time when I could do nothing but just lie there and think. And so I chose to think about the markets and all the work I'd been studying and doing, and began to get some insights about how some of this stuff actually fits together that has proven to be very, very profitable ever since.
Wow. Well, yeah, you never know what you're made of until you face adversity. And, what a positive thing to focus on. I would have been focusing on my misery. So,
I learned mind over matter then, let's put it that way.
Yeah, I mean, congratulations with coming through that. And, I want to thank you for sending me a couple of books that one you authored yourself, the other one I want to ask you, but I'd like to start with Mercury, Money, and the Markets. And
right.
I'm dangerous enough with my knowledge. I follow some Gann stuff, planetary oppositions, eclipses, change of seasons, things like that. But I was fascinated by Mercury, and knowing nothing about astrology, I would guess that Mercury might be one of the more, I'm guessing, volatile planets because of the word mercurial nature. And perhaps that you chose this planet for the book because it offers a myriad of trading opportunities when you get the hang of it. Am I close?
Yeah, you're right on the money with that, Dale. It is that volatility. It's the most rapidly moving planet, outside of the movements of the moon, which is not really a planet, but from an astrological perspective, we consider it such. But the thing that intrigued me about Mercury is that it has these distinctive periods in which it has apparent retrograde motion. And looks like, from our perspective on Earth, that it's moving backwards in the sky. That's kind of an optical illusion, and we won't get into the celestial mechanics involved, but that happens about 3 times a year for about 3 weeks each time. And what I had discovered from my own experience was that trading becomes a little bit more difficult. It's a lot easier to misread market signals during those times. And so I decided it would make a good subject for some more rigorous empirical research. And that's what went into the book, Mercury, Money, and the Markets, doing a lot of back testing and trying to figure out what these dynamics actually are.
So was your initial belief of, markets being real choppy during those 3-week periods, your initial intuitive response would be to stand aside, or did you discover other things?
Well, what I've learned is we're going to make money in the markets, we have to be in the markets. And so we're talking about 18% of the year, 9-10 weeks out of the year, in which this phenomenon is in effect. And if we can afford to take that much vacation time, it's great. But personally, I wanted to stay engaged with the market activity. And so the question is how to work with this constructively and creatively. My own experience has been that when we have a period with Mercury retrograde, I tend to be more inclined to second guess my own judgment about the markets. I'll do the analysis, I'll figure out what the trade setup is needs to be, and then I'll convince myself to do something else at the last minute. So it's like I don't trust my own judgment, and that's an interesting thing. I think that's the way it impacts me personally.
All right,
but with the
be
book,
interesting thing to look at.
Yeah,
well, I like that all year.
Yeah,
So,
okay.
all right. So maybe we could move. Maybe we could move to the next slide, and
Good.
you
Yeah.
could tell us a little bit about
Yeah,
you know,
let me talk a little bit
method.
about some of the methodologies that we're
Yeah.
using here, and what I'm interested in focusing on is some of the methodologies that we use to connect price movements with the planetary dynamics. And I think it's helpful for those who are inexperienced in this whole realm of endeavor to be able to see some of those correlations. This is a chart current as of yesterday for Bitcoin versus US dollar. And
Okay.
of course, we had that big historic run up last fall and almost to $20,000 per Bitcoin, and peaked out on December the 17th. And then, of course, there was a big pullback after that. I became curious in looking at this, and this is a technique right out of W.D. Gann studies, is that if we're trying to analyze any market, we're interested in looking at things from as long a time frame as we possibly can, and find out where the big highs and lows are, and then begin to base our analysis of cycles and market trends on those big turning points, and then refine the work from there. So, you know, the peak was obviously a classic parabolic move, speculative bubble, and so I was less concerned about the top of that market, but where things actually began to level off significantly at the end of that move. And so we're looking here in early February of this year when the big plunge stopped, and we've been in more or less a congested trading pattern ever since. Began to define some levels of support with that move. So what I did was take a look then at what was going on when Bitcoin hit that trading bottom, and figure out what was happening planetarily with that. And we can go in and analyze the various configurations. In this case, we're looking at things heliocentrically here. With this, as Bitcoin hit that bottom, we have this list of the various alignments planetarily, Earth in a 135-degree angle to Saturn, Mercury conjunct Pluto, and the Mercury square to the trans-Neptunian factor Zeus. Mercury moves pretty fast here. Venus in a sextile to Saturn, that's a 60-degree or sixth harmonic alignment, and Venus to the trans-Neptunian factor Apollon in a third harmonic alignment. And what caught my attention here was the Venus-Saturn dynamic, because this happens relatively fast. We get can begin to collect enough iterations that we can do some significant backtesting with that. The Venus trine Apollon, because it's a 120-degree angle, moves not as frequently. So I wanted something that would move fairly rapidly to begin to define that. So what we did then was take all the previous iterations of that occurrence. Now, Bitcoin has only been trading for about, well, it's only been in existence for a little less than 10 years. So
I wanted to ask you about that, Tim, because I've talked to other people who really don't do, you know, a lot of in-depth analysis because they complain that there's not enough historical data.
I mean, that's a very, very valid argument, right?
What's your thought?
Well, right now, we look for the data that we've got, we analyze that, and we take that with a grain of salt. In other words, I'd rather begin the work and to try to determine what are the salient features of this without trying to take that to the bank with regularity, you know.
I see. All right, so
so we want to use some common sense involved here. That's basically what we're after. Right?
Okay.
So, but then what we do is take those examples and back test it, and this is what the aggregate looks like. Again, that heliocentric sixth harmonic or 60-degree alignment between Venus and Saturn. With this particular chart, the middle point where the 0 is the exact date when that alignment occurs. And on average, we have a market that finds a bottom about 3 weeks prior to that, with Bitcoin and then accelerates through that. So this is what the pattern looks like. And, there's some potential here for a positive dynamic coming out of that. It's enough to attract our interest. In other words, the market's not flat when that happens. The question is, what do we do with this information? So we go back to our chart here, and we're looking now at the dynamics between Venus and Saturn in the sixth harmonic. Now, there's a methodology called planetary price lines in which we can translate the positions of planets at any given time into a price equivalent in any market. It's one of the most valuable tools that we have in doing this kind of work. And so we can translate then the positions of Venus in the sixth harmonic and graph them out on this chart, and we get something that looks like this, kind of busy, but we are seeing these lines that are slanting at an angle representing the movements of Venus heliocentrically over time. And what we can do here is take out the sixth harmonic. These are the first harmonic lines, which represent the actual position of Venus, multiplied out by 360 degrees. So we can see that what Venus does is define some interesting areas of support and resistance for Bitcoin trading.
Where do traders find this tool? Is this proprietary?
Well, this is a tool that's built into a piece of software called the Fibonacci Galactic Trader software. It is from PAS in St. Augustine, Florida, or Jacksonville, Florida. I think they moved to Jacksonville now. Okay. It's been around a while. The developer of this program was Jeannie Long, who took some work of other astrologers and really modeled this on W.D. Gann's work as well. Wow. If we look at some of Gann's charts, he will had this, looking at his actual trading charts, he would make notations in pencil on the charts and hand draw these lines, indicating levels of planetary support and resistance. Very, very intriguing tool. He never wrote about it extensively, but it's one of those things that we can see in evidence on his chart, and he would label it, this is a Mars line, this is a Jupiter line, and so forth. And we can, based on studying that work, then we've been able to computerize that, so we can simply calculate the positions of the planets, throw them on the chart, and see if there's a correspondence.
Yeah, he showed that to me when I had lunch with him one day.
Really? I hope you paid for the lunch.
and Jesse Livermore stood us up. But anyway, fascinating and interesting that you're open to, a lot of people that do their own work, they believe it's got to be, everything that they do, they created, but you're out there looking at the environment of people that have similar interests and integrating a tool that you didn't develop because it works for you.
Exactly. And
I should let go of the ego,
You're right. Yeah. I mean, and having that total paralysis experience, Dale, did a lot to remove ego along the way. We have to have a certain level of humility to do this work effectively, and so
I agree with you.
And I really view myself as a student, and what my real passion is what I call astro trading education, because this is fun stuff to use. It's very, very effective. I use it in my own trading. I coach traders. I have my publications, my website. But the real deal here is to be able to share this information so that everybody can benefit from it. And there's really a community of people who've been developing these tools, and we work to try to enhance them, which is not to say there aren't some egos involved and some competitive spirits along the way, but still. So we look at this in the sixth harmonic. These are just the Venus lines, and then we can go in and add the lines for Saturn. Now, we'll put those in here purple. And we get a very, very busy kind of chart. But again, we're looking at this over a long time frame here. Let's see. Let's take out those.
Wow, I feel like I just dropped some acid in the 60s.
Yeah, right, exactly.
All right, anyway.
It's all our heart, right? Okay.
Yeah, it's interesting. So do you have a view going forward based upon this work?
Yeah, absolutely.
Bitcoin?
We're going to move right on into that here because what we're looking at here now, these are just the first harmonic lines with Saturn, and we can see then it's a well-defined Saturn trading channel in the first harmonic that Bitcoin is moving in. With those heavier lines, and of course we can do this. What we'll do is zoom in here a little bit so we can get a little closer picture. This heavier line just below the current trading range is about where Bitcoin is today. I checked it a little earlier this morning. It was in the $6,500 range. So what we're looking for is to find some support on that first harmonic Saturn line. But as we do this analysis then, and we look at this diagram, what's obvious is that the celestial event itself is not the ideal place to trade this. In fact, we want to be going back a couple of weeks if we're going to optimize this trade in anticipation of this. And then move into it and sell off a few days afterwards. So we can do the statistical analysis based on the iterations that we've got. We've got 14 examples of this in the history of Bitcoin. Again, not hugely significant from a statistical point of view, but what we're seeing here is that about 79% of the time, if we optimize this trade with this time frame, it turns out to be profitable. And so that's, to me, the kind of consistency that we're that becomes tradable. So our strategy here would be to trade this to buy Bitcoin 23 days before this sixth harmonic alignment between Venus and Saturn, and then sell it 4 days afterwards. So that would be the optimum trade. Then the next time we'll get to that point will be coming up in a couple of weeks from now. The 21st of August will be 23 days before the next alignment there. So we make the forecasts and the projections on that basis, saying this is basically a swing trade. We'll be in it for a little over 3 weeks' time, and we would expect a move upward in Bitcoin on that basis.
Wow. Yeah, very interesting. What else do you have for us, Tim?
Well, one of the other things that we're looking at here is the ability to go back and look at historical events and try to solve the mystery of what's going on with them, and then use that as a frame of reference here in terms of our current trading as well. One of the things that I got interested in studying recently, I do a lot of backtesting and research and trying to correlate the current planetary alignments with their previous occurrences. One of the things that makes this particular discipline so unique is that we can project with a great deal of accuracy ahead of time when various planetary alignments are going to happen in the future. We also have a historical record of when they've occurred in the past. So all we have to do then is compare the market data from the past to the planetary alignments that occurred then, and see when those alignments are going to repeat in the future. Now, of course, the great caveat is past performance doesn't guarantee future results. We need to sneak that disclaimer in here somewhere. Yeah, yeah. But right. And it's certainly true of whatever analytical method we use. But if we find that there is a high probability or reliability of the past occurrences, then we can be a little bit more confident in the trading that we're making here. So one of the big events, of course, in market history occurred back in 1929 when we had the big crash in the market there. It was an interesting kind of dynamic. The Dow hit a high, the incredible figure of 386.10. It's funny to look at these old numbers with the Dow, right? That was the all-time high at that point on the 3rd of September of that year. And of course, if you look at the history books, they say that the crash really began on the 24th of October that Black Thursday there. And at that point, the Dow was at just shy of 300, 299.50. And that's when it became evident that there was a panic going on. And of course, the result of that was it dropped almost 30%, 29% in 5 trading days, which was totally mind-boggling for that time. But
so
what I became interested,
it's interesting, Tim. You point out this example and when they call the crash, because in '87 people talk about the October crash, but the high was actually in August, and
exactly.
We had that pullback like we had here in 28, 29, and then a failing rally into October before the collapse. So,
exactly, right.
Yeah. Okay.
And so it's not, the crash doesn't initiate at the high necessarily,
Right. It's a capitulation phase.
Yeah. And so what's going on here is, if we look at this from a little bit a longer time frame, what actually set this whole thing up? Is the question I was trying to figure out. And when we go back a little bit farther, back to earlier 1927, we see this very congested trading picture here. This was not, it was a fairly short-term rally that went on, from all this. Basically, the question is, what triggered that? And how do we begin to time that upward move that indicates we may be into a rally which can then lead to a crash? It's not just the dynamics of what causes the market to fail, but what causes it to build to that peak. And in this case, it's not quite the same pattern as we saw in that Bitcoin chart. It was not a parabolic move straight up. It wasn't entirely speculative, although it was pretty energetic. It was not quite that kind of insane upward trend that we saw with that Bitcoin chart. So what I was looking at here is I discovered there was a solar eclipse back on the 17th of June in 1928. And between the time of that eclipse to that market high, we had an 88% gain in the Dow Jones Industrial Average over that 15-month period.
Wow.
And this is a pretty remarkable dynamic because of that specific eclipse. Now, again, without getting too deep in the weeds with the
we had a big eclipse last year. Is there any parallel?
Exactly. Well, that big eclipse last year occurred on August 21st, and it was quite dramatic because it was a path of totality that went across the entire North American continent, and it had a big impact, geopolitically as well as on the markets, and we look at both of those dynamics. And then what we do is look at eclipses in series. They occur over a certain period of time, a couple of thousand years, at 17-year to 18-year intervals. So roughly 18 years between eclipses in the same series. So when we have a current eclipse, we go back and say, now when was the first one here? We had one in July, and we had to go back to like 1344 to find the first eclipse in that series, and we study all the eclipses in between. The one that occurred before the market crash in 1929, this one in June of 1928, was the first eclipse in what we call Saros Series 155. And so it was the first time that there was this whole new, from an astronomic point of view, occurrence of these eclipses, and they occur at 18-year intervals thereafter. So we saw with this first eclipse in that series a gain in the Dow of 88%. Then 18 years later, in 1946, we had that solar eclipse, and there was a 15% loss over a 15-month period. So we're using this 15-month period, arbitrarily here because of the time frame between that eclipse in 1927 and the market high, or in 28, the market high in 29. So in this case, in 1946, of course, we saw a big fall off shortly after that, but some bit of a rebound. So an interesting decline there, 15%. Then 18 years later, 1964, we got the eclipse on the 9th of July. and a 12% gain over 15 months. So nothing to compare to that 88% gain, but as we move ahead here and then look at 1982, we did see a pretty substantial gain there, and a pretty straight trend line, basically, from that eclipse without a lot of perturbation.
One more low into August was the bottom.
Exactly.
That's how old I am. I was short down there. Go ahead.
Okay. Well, we'll all remember this one here. Okay.
Short IBM down there. All right. So here we are, 2000.
Yeah, 2001, and of course here we had 9/11 and the dot-com bubble bursting and all of that. So it was a very distressed market. But the interesting thing is it was only an 8% loss in the time frame following that eclipse. Now, this eclipse series, we've only had these iterations so far, and what's going on here is that the next one coming up happens this Saturday.
It's a partial though, right?
Yeah, these are partial eclipses, and as an eclipse series begins, they're visible near the poles of the Earth. And then there are always partial eclipses. As we move forward in the series, they move more and more closer to the equator, and they become moved from partial eclipses to total eclipses. And then as the series ends, a few hundred years later, it will begin to taper off into partial eclipses again. So that's part of that natural cycle of eclipses. Each series has its own life cycle and rhythm, so to speak. So our notion here is that we can go back and look at some of these previous occurrences and say, okay, what's going on here with the market dynamics? Does this offer us a trading opportunity or not? And right now we're in the process of doing the final analysis, trying to figure out what's going to happen with this next eclipse. So this isn't, there's never a dull moment when this kind of works. There's always something coming up to take a look at.
It's fascinating. So do you have any expectations? Or you're working on it now?
Well, we're working on it.
I did notice you're still bullish. The market,
yeah, I am.
according to market time.
Bullish long term, and based on what we've seen during the previous eclipses in this series, I didn't average out these numbers, but we've had 5 previous iterations. 3 of those, were bullish for the 15-month period. And note that one was the 88% move and the other was 53%, 55%. So, we've got a much stronger bullish tendency coming out of this particular eclipse series. Again, we're dealing with relatively few iterations. The cool thing about this is that we actually have market history that we can look back on, going back to 1928 and see, okay, this is the way the market responded, and we can study that for the entire duration of this current eclipse series. That's fairly rare. A lot of times I'm going back to the 16th century trying to figure out what were the economic conditions along with an eclipse, and that gets a little sketchy. We don't have market records going back that far.
Okay. All right, so it was really great meeting you. Perhaps you want to put up your slide again, how people could contact you for
let
coaching.
Me show you a couple things here. I've been doing the Financial Cycles Weekly newsletter. We started that as a print newsletter back in 1987, and now it's all delivered via email. And we have that as a weekly publication, and typically highlight some of the dynamics in the market. We also track our model portfolio there as well. And with the model portfolio, we have do our stock picks of straight equities trades based on our astrological analysis. And for the last 16 years, we've had a pretty consistent pattern of market outperformance with that. The Dow has averaged about 7% return per year. The S&P about 8%. Our average has been about 36%. We've not had any losing years in the last 16 years with this astrologically based model portfolio. And again, past performance is no guarantee of future results, but this is what the past performance looks like as we've been able to track this over that period of time. And are very, very pleased with that. So we have our newsletter available with our website, also what we call our Gold Plus Elite membership program, in which we call that a done with you trading program. Our members in that group get on a conference call once a week. We do that on Sunday evening to talk about the upcoming trends in the markets and to describe our planned trades and go over that. And then they also get the access to trading charts for each of the things that we're trading that use those planetary price lines and give that extra astrological dynamic with the trading as well. So then each week in the newsletter, we include a section on the trade management. So we're recalibrating the stops for the active trades and things of that sort. Essentially, our strategy is to time our entry into positions astrologically. If the trade is successful, we trail the stop and then let the market decide when to take us out, rather than trying to make the decision about when to get out of a trade. So.
All right, I'd like to just wrap it with one final question. When you have this analysis, what are your risk management tools for trading astronomically? Well,
basically, we look at position sizing, and we standardize all of our exposure in the market to essentially the same position size, in terms of a dollar amount. We also set very aggressive stops based on the planetary price line analysis initially, and then we basically recalibrate those stops on a weekly basis. So this is designed.
Can I translate aggressive stops into low leverage and wide stops initially until the picture begins to confirm?
Exactly. Yeah.
Okay.
So yeah, and we do not typically take margined positions, and so we were taking smaller positions to demonstrate the efficacy of the model portfolio. It's up to our members to decide at a personal level how much risk exposure they're comfortable with, and so. What we do is basically look over our shoulder. Here's what we're doing with our trading, and that's why we call it a done with you program. We're not managing the money, and we're not saying it's a do-it-yourself thing, go figure it out. We're going to show you exactly how we're doing this on a week-to-week basis, and then you can trade along, with your own portfolio as you wish. So it's designed to be done in about 53 minutes a week. We spend 28 minutes on Sunday evening with our conference call, and then the remainder of that time is getting in, entering the trades, moving the stops, managing it. So it's really a hands-off kind of approach, allowing that risk management dynamic to manage the trades for us. So, if you want to be more aggressive and watch the computer screen 8 hours a day, you can do that. But this is designed for those who want to use.
Never changed any trade's destiny by staring.
I know.
By staring at it.
It doesn't change our ulcers, though.
At times, though, Tim, I do joke. I'll put my cursor over the candle and try and drag it in the direction. And then if that doesn't work, you're real desperate.
If you get the software that makes that work, Dale, let me know, and I'll incorporate it.
I've tried a magnet when I'm good. Anyway, what a great interview, Tim. I'm so glad I reached out to you, and appreciate you accepting to come here and talk about your work. For some reason, after talking to you for half an hour, I feel like going out and buying a Mercury Cougar with a Bitcoin. So, they were one of my favorite cars back in high school. And I'm really glad to meet you. You're now my trading warrior brother, and what an interesting perspective.
Thank you, Dale.
God, I'd love to learn.
That's what we're all about, training people how to do this for those who want to pursue it. It can be a little bit complex to try to understand it all, which is why we try to simplify it so that people can get engaged with it with a minimum amount of time and effort and get the benefits.
Okay, well, I'm going to say thank you once again, Tim. I'm going to put on my tinfoil hat and get under my pyramid for the rest of the training session. And it really was a pleasure meeting you.
Thank you so much. Take care. Bye-bye.
Thank you for your time today. Everyone, that's Tim Boast. You can follow him on Twitter @TimBoast, and there's his website, timboast.com. And thank you again, everyone. Have a great day. We'll see you tomorrow for investing.com Thursday. Good hunting. And remember, don't just count your pips, count your blessings. Adios. Thanks again, Tim.
Thank you.